Happy Monday, everybody. I hope you had a great weekend. It's turning soggy here in Chicago, but at least we're about to enter November in the 60s. Today is October 31st, 2022, and this is your Monday Market Update. In keeping with the day, let's review the week that was, and it turned out pretty sweet. And let's see if we'll get a trick or a treat this week. Will it be spooky or not? So let's jump right in. Last Monday opened mixed, and it was swinging between gains and losses in the morning as the market did some digestion. There was a lot of global political news. The National People's Congress wrapped up in China, and President Xi was pretty much self-appointed for a third term. And in case you haven't heard, there were term limits until he got rid of them. Across the pond, we also had the new Prime Minister of the UK, Rishi Sunak. I hope I pronounced that correctly. Just a quick fun fact, this is the same person who resigned from Boris Johnson's cabinet just a few months ago, ahead of Johnson's resignation. Just saying. Soon after the open, U.S. eco data hit, and it was not so good. PMI data showed the economy is falling into contraction territory. Stagflation concerns again, as we're still facing a Fed that needs to hammer down inflation and an economy that's slowing. Treasury Secretary Yellen spoke late in the morning with some more of a cautious tale. Yields moved down and stocks moved up, go figure. With all of the earnings due on the big tech companies, the markets just needed to get into position. For Monday, the Dow was up 1.33%. S&P up 1.19%, and the NASDAQ was up just under 1%. Tuesday, futures were down, mostly on Chinese currency action. The market turned around and spent more time reacting favorably to the UK new Prime Minister. Recall that we spoke about the fact that the latest turn down in the market came when Truss, the 45-day Prime Minister, brought about her plan for the UK economy. Well, since we have done the about-face on that, at least that fear is gone. Good earnings in General Motors, and bond yields were pulling back. The market got ready for, after the close, Microsoft and Alphabet closed near the high for the day. The S&P 500 was up, the market got ready for the close, and it closed near the highs for the day. It was getting ready for Microsoft and Alphabet, which were coming up after the close. The S&P was up another 1.63%. Dow was just up over 1%, and the NASDAQ up 2.25%. After the close, Google and Microsoft reported mixed results, and the market sold them both off, down over 6% overnight. Along comes hump day, Wednesday, and the market gapped open lower on the heels of a rough earnings from mega cap techs. Eco data took center stage, though, and though it is not the Fed, it was the Bank of Canada that took the stage. They made news with actions before, as did the Australian Bank a few weeks ago. This time, they raised rates by 50 basis points versus the 75 that the market was expecting. Sound familiar? This is what the Fed whisperer, the Wall Street Journal reporter, leaked out last week, that the Fed would go 75 this week and then 50 in December. Overall, it was a move that got the market's attention. Quick note on this, and the words beginning to be thrown around again, Fed pivot. Mohamed El-Erian, chief economist at Allianz, said last week, one of the problems we're getting ourselves into is we keep redefining the Fed pivot. Sound familiar? We did that with recession recently. First, it was going from raising to lowering. Then it was stopping raising rates. Then it was a dovish hike, like we saw from Canada. Smaller hikes. One issue with that is that we may bring smaller hikes just for longer. Slowly remove the Band-Aid. I don't know if that's really what we want to see. The problem with that is just saying that and changing the definition doesn't change the other facts on the ground. We can wish it, but I don't think we'll wish the inflation away. So we'll have to see what this coming week brings. More on that in a moment. For the day, Dow eked out a very slight gain. S&P 500 was down 0.75%, and the NASDAQ was down 2%. Thursday brought more volatility, and there was a lot of news to digest in the metaverse, or at least at Metaverse. Formerly known as Facebook. That stock was down over 20%. And yes, I started to get calls about buying it. The answer, call me about it. Sorry, I don't do individual stock recommendations on these videos. I've not tried, but I'm sure my awesome compliance team would have something to say about it. Not to mention the fact that I hate when videos like this give advice like that. It's that kind of stuff is too plan specific. So I'll stay at the market level. Meta got crushed while Caterpillar was up over 7% on amazing earnings. Yes, we're digging lots of holes. ECB raised rates by 75 basis points as expected, but they signaled that there may be smaller hikes in the future. Are you getting that vibe yet? Closer to the end than the beginning. Q3 GDP came out, surprised to the upside, and add in mortgage rates are up over 7% for the first time in 20 years, and we got to move up in stocks for a while. Then we got some words from Putin, a bit more aggressive than we had heard, and China and Russia are getting closer. Overall, geopolitical tensions they're up, not down, wrong way for the markets. Add a backtrack from the ECB on that slower pace comment, and the markets turned around to see session lows as we awaited earnings from Amazon and Apple after the close. Oh, and Elon Musk tweeted, "The bird is freed," as he completed the purchase of Twitter and walked into the headquarters carrying a sink. Yes, a sink. His pun, let that sink in. You may think I could make that up, but I couldn't. Overall, the market ended mixed. Dow up about 0.5%, S&P down about 0.5%, and the NASDAQ home to these ugly earnings down about 1.5%. On Friday, the market looked past, well, just about everything and had a huge day to end the week. Core PCE inflation data came in a bit better than expected. Not great, but a bit better. Apple earnings solid. Amazon, well, not. University of Michigan data helped the peak inflation story. The Dow was up over 2.5%. It helped that it had an 8% move from Apple. S&P up 2.5% as well. And if you've been paying attention, the NASDAQ up also this time 2%. Still pretty close to that algo-driven correlation. Wrapping up the week and the month. This one is there to remind you not all historical numbers work. October, spooky? Not really. We're not done until the bell rings today, but into today, the Dow's up 5.72% for the week. Fourth straight winning week. The Dow is up 14.5% in October. That's the best month since 1976 and the best October ever. S&P 500 up 3.95% for the week. Second positive week in a row, up 8.8% for the month. The NASDAQ, even with the ugly earnings coming out, up 2.24% for the week. Second positive in a row, and up almost 5% for the month. This coming week, let's see. Let's put another run-of-the-mill week, right? No. Eco data will be all over. Today, some Chicago PMI data. Tuesday, let's focus back on jobs. And the JOLTS report will be out. Recall that last JOLTS report showed over 1 million jobs came off the table. Jobs week and eco data, keep an eye out for costs of inputs or labor units. Yes, it will be full of earnings, but there's this little thing called a 2-day Fed meeting and a presser to watch. This will be interesting. There have been Fed heads that have said that they're happy that the markets are down in response to the Fed. There are commentators that sum it up by saying that the Fed thinks the only way to get rid of inflation is to make you feel less wealth. And that will come with a lower stock market, lower housing prices, and such. Well, mission accomplished. We'll see. 2-day Fed meeting, statement and presser on Wednesday. If the earnings beauty contest is not enough and the Fed meeting doesn't do it for you, maybe like me, you think most of that's priced in, at least we'll have something for you and me at the end of the week. This is the first week of the month. Yes, jobs week, and we'll have non-farm payrolls. Friday will bring the Fed heads out again, released from that quiet period. Just one on Friday, Collins, but we'll see how this parade goes. If you plan to watch TV or listen to the radio, watch out, especially in states with major elections next week. Oh my, the commercials are so bad right now. Excuse me. So that is the week behind us and the week ahead of us. Watch closely, and if you can hear the signal through the noise, you'll hear that if Powell does not deliver too much hawkishness, we'll have the answer we need for the path ahead. Please keep in touch. About to be 2 months until the end of the year, and so much to get done. Until Friday's planning video, please stay in touch and call with any questions. Have a great week.